participates or joins, we can just fill them in afterwards. Okay. Welcome everyone to this Friday morning, bit chilly, but we get going, We are having a Section 12J webinar to discuss what the Section 12J is. We have Dave, who's one of the directors of IEV, and we have Zetu, who's one of the head of the sales team here.
Thank you, Tristan. Good morning, everyone. Thanks for joining us on this Section 12J webinar, where we'll be unpacking exactly what is Section 12J and our magic. I have with me Dave, the director of IEV. Morning, Mr. Humphrey.
Good morning to Zetu.
How are you this morning?
No complaints, thank you. And morning to everybody out there. It's a privilege to share this type of fundraising opportunity that we still have with you all.
Yes, thanks, Dave. So we'll be going through the slides and being interactive. We do welcome any questions that we'll answer even after the presentation and even way after, maybe even in the following week, to those that are interested or needing more information on this exciting opportunity to participate in stimulating the country's economy. What's your thoughts on this, Dave? What do you think is most exciting about this exactly? Section 12J, that is.
Yes, thank you, Zetu. Well, for me, seeing small businesses receive appropriate funding is probably the most exciting.
The most exciting thing, because that's what they struggle with mostly. Some of them are still ideas that don't have track records, and the big banks wouldn't actually give them even an year. And this is an opportunity to have you and I to actually say, look, I like your idea of making these shares the way you do, and here are my taxes to actually fund the business.
Yes.
Yeah, that's the most exciting thing to me, myself personally.
Yeah. So what we've seen, Zetu, in some of our qualifying companies that we've worked with for the last 2 years, are new jobs being created.
New taxpayers. So tax base is
eventually
expanding. Yes, that's true.
And businesses that are slowly starting to expand. As I say, we've only journeyed with a few of the qualifying companies for 2 years.
For 2 years. This is the third year now.
Yes. Some of them we've just started. We've launched new share classes in various of the sectors of the economy. Obviously, after COVID, there's been a lot of businesses struggling.
A lot.
So for me, from Impact Empowerment Ventures, we bring new businesses and current businesses back into a financially stable position.
Yeah, this is quite exciting, Dave, because it affords your everyday South African to now actually be hands-on, to say, you know what, I'm quite aware the country is struggling with this and that, but this is what I can do myself to make sure that I now have a say in things other than just paying the taxes and looking the other way.
Very good.
Now we have an opportunity, which is running, when is it, 30th of June?
Unfortunately, Zetu, the 30th of June is the sunset clause, which Treasury has implemented. Don't forget, there was a sunset clause in 2016.
Oh.
So 12J started in 2009.
Yes.
2016, there was a sunset clause, which Treasury, with consultation of the industry, felt they could extend it for another 5 years.
For another 5 years more. So let's hope this can actually be extended as well.
No,
not at all. No chance.
A fraction of a chance. But I think there's more chance of the Blue Bulls winning the cup than it is for 12J.
I can't really comment on that, Dave, but yes, if we may maybe, I would say for the sake of everyone, give more information on exactly what it is that we're meeting you on today, which is quite beautiful.
Certainly.
I'm sure by the end of the presentation, our attendees will agree as well.
Thank you, Zetu. Let's start the presentation then.
Thank you, Dave. So to speak mostly on this, why I like this, but Dave, before let's if you can go back to the first slide, please. To everyone, yes, this is a disclaimer of who we are, genuinely, because most people think perhaps what we talk about. Why I like to actually just sit on this slide a bit is to emphasize that when we talk to people about what we do, people are quite skeptical. They think, geez, man, is this even legit?
Yes.
So for anyone interested, we can actually email this to you, and this slide gives you a disclaimer of who we are as an FSP, our FSP number as well, that you can double check with the FSCA.
Yeah.
This is what the slide is about. But the meat of the whole thing is what Dave was running into. which is impact investing itself. Now, when you look at impact investing, if you were to read up on it, you will realize that it sits there at the higher echelon of that hierarchy, which is mostly environment, arts, and culture, where we, as impact or IEV, should I say, impact empowerment ventures, are looking at addressing such issues as jobs, housing, food security, which is down there at the bottom, and that we believe genuinely this is where we can make the difference in the country. And using this investment initiative to actually participate in SME ownership, agriculture processing and production. So what we're talking about there more than anything is to say we can genuinely be impactful by directing where we send these funds to. Anything more to say on that, Dave?
Yes, Zeto, for me, the bottom end of this pyramid is what's appropriate to Africa.
Yes, that's true.
12J is an African investment, and it's into small businesses that occupy a space in the sectors in South Africa. And so a lot of the impact investing internationally, as you said, goes to the top end of this triangle of needs. But our 12J and the ethos behind impact as a group is to fund small to medium-sized businesses. First of all, into business.
Fund them into business, yes.
Yes, not out of business.
Not out of business, as it actually happens most of the time.
It happens through different kinds of funding.
Yes.
12J is a 5-year journey that we go through with the qualifying company. Our model is to stay with them for 5 years, especially if they're a startup.
Leaving them empowered on the 6th year, to say.
Yes.
By the end of the 5th year, it should be a standalone, independent institution now.
That's correct. A business that can run on its own without our help anymore.
Yes.
So that's what we mean by funding a business into business.
Yeah.
A lot of the banks and other financial institutions will lend money to companies, but they expect them to start paying the interest immediately with huge amounts of collateral. 12J,
plunging them into debt, in fact.
Possibly, and lack of growth is the result. Whereas the business is funded with patient capital from our model. And they're able to use that money to grow their business and then enhance the return for the shareholder too.
Funded with patient capital. I love that, Dave.
Yeah. And then lastly on the bottom there, I'm passionately involved with the agricultural sector. Jobs need to be created there. We need young farmers to be coming through in the agricultural sector. What we've seen, and you can see in the research that's been done, the average age of farmers is even older than me. Quite a lot, in fact, across the whole country.
And then that's the average age of farmers.
Yes, in the private sector. And what the farming community needs are young farmers to be passionate about farming, but to learn from the older farmers. And so one of our qualifying companies has got 5 training centers across the country to teach small farmers how to run a business. And they use the rabbit sector for that. Henny Viljoen and his team are really passionate about raising small farmers into business owners.
Imparting the knowledge as well.
And then teaching them how to farm. So we've got 5 years to walk a road with these people. And those centers of excellence where they train them are there to teach them. And we assist in funding them.
And we're already seeing this even before the 5th year. We're already seeing the impact of this. So imagine by the end of the 5 years in investing in this, the impact we'll make by then. Not only making money, but of course the difference in society too.
100%.
And that is our mantra. I like to emphasize that. You say this is what actually guides us in investing, in impact investing, which we're looking at enhanced and risk-controlled returns, investment for change and hope. That is how I greet Dave every morning. Enrich.
Enrich, eh?
Enrich. That's true. That's true. That's the beauty of what we're doing. Not only are we putting people in business, but we genuinely are enriching lives.
So the net effect, Zetu, of a business, the net effect of empowering a business through this type of funding, what's the outflow into the socio-economic economy around that business when we enrich people? How do you see that on a practical scale?
Dave, there's a lot of beauty in being able to do things for yourself and being in business and having that business flourish and helping other lives, you've actually given that person a sense of dignity.
Yes.
That their lives are far more enriched genuinely, to be redundant, but I think I should. And just thinking, and it expands your view of the world, knowing that I can wake up and go and do this, and it can have these positive effects.
Have you got an example of one of our qualifying companies?
One that I'm quite busy with is genuinely Tatomo.
Yes, that's student accommodation.
Student accommodation.
Right? Yeah, very exciting.
The language we're talking there, every week we meet, is so advanced. And they are happy themselves, which I'm sure you may be aware of. But with the possibilities that now are endless, not only are we finding them in this student accommodation, but even in partnering with other small businesses like the furniture maker, furniture manufacturer, gentlemen. So, but they are quite happy about these endless possibilities. When they started, they were only looking to put students in some accommodation, but now they're learning. Hey, look, what we are doing here actually spreads a little bit further than just what we dreamt of. Because after that, they still need to find security guards. They still need to, all of that. Can you see the ripple effect? They still need to find people to keep the premises clean. So can you see it's?
Where is this particular student accommodation?
In Braamfontein.
Okay, so that's quite close to.
Quite close to Wits. I almost said drought, showing my age. UJ.
Yes.
So it's in Johannesburg in Braamfontein, and it is looking to. I think the project is kicking off in June or July. I'm not certain of the dates, but around there.
Well, we've been to walk the ground there.
I remember. Yes.
And the
how was it though? Is it?
I was pleasantly surprised. It's a very old building.
Yes.
Currently, it's been sold. It's been on the market for quite a while, but it's still inhabited. And there's a creche there. There's shops at the bottom. So really, it's a business already that's functioning, but needs to be converted now into student accommodation. So what you mentioned there too, Zetu, was so interesting. One of our other qualifying companies, Magabesa Furniture Manufacturers.
Now,
tell us about that and how they can work together.
They can work together now with Tatomo in building furniture infrastructure in the property, because that's what we're actually handling today.
Yes.
Even. So I need to actually meet the gentleman from Magabesa.
That's right.
Magabesa Furniture. I've only been told slightly, so that's why maybe I don't even know that. But
now I've met with him.
Have you?
Yeah. Yes. Remember, I represent Impact Empowerment Ventures with the qualifying companies. I interact with those business owners on a weekly basis. And some of them are struggling, really struggling.
Yeah.
And some of the contracts that Magabesa used to get due to the COVID, I call it a COVID economic crisis.
So
he's had to place on hold. So now that we've brought him in contact with Tatomo and Tabo's team,
new hope.
Well, he's got a contract if they can negotiate properly. So it's business to business inside our qualifying company.
But what this helps with is that now this gentleman does not only need to go and hunt for business himself, but through us, he can now connect with other.
So we've seen that on our cannabis projects
as well.
By the way, if you go onto the website, we'll
12J. Is it 12J?
No, it's impact 12J at co.za.
Yes.
Yeah. And
we can give more detail on all our share classes. And in evaluating businesses now, the slides talk to what exactly do we look at in evaluating businesses? Not only the nice stuff, if I may use the word, but genuinely we look at business and try to assess on their own merits. Are they worthy of being invested into? But those are the 4 pillars we look into. Commercial merit is the first one, and the impact it has on people. We do assess risk as well as technology. There's nothing magic in this 21st century without actually interrogating technology.
So this is one of the lenses through which our investment committees always look at projects, Zetu. Remember, we're going to talk about our unique offering, whereby we bring your own project.
And you bring your own investors.
Yes. So we can't always determine what the best technology is because we're a fund manager. We want that qualifying company to have appropriate technology in their sector. We mitigate the risks by getting the qualifying company to market their own share class. And they have to bring at least 10 taxpayers, investors. Yeah. The people that we work with on the qualifying companies is essential. So we have a vetting process for that, vetting process. And commercial merit is essential.
Merit is quite essential.
Although with a startup, you never really know.
Yeah.
And that's why it's called venture capital.
That's why it's called venture capital.
Yes.
Thanks for unpacking that, Dave. Thank you very much.
All right. So this is still a good report back from what we've been doing as Impact as a group, but Empowerment Ventures for the last 3 years.
For the last 3 years, yeah.
Leading up to August 2019, we had one project.
Just one?
Yes. And it was a affordable housing project.
Oh.
Where we combine the manufacturing of alternative business technology housing project with a small business and selling it into certain areas.
Okay.
It's still slow, but it's still one of our qualifying companies. Then we grew. We were able to raise 130 million rand.
With 6 projects by February 2020.
Yeah. And throughout 2020, even though it's been COVID, we've been still talking to qualifying companies along the way. And we get many of them looking for funds, knocking on our door, emailing us as a result of seeing our website.
Yeah.
They want to
attending such webinars, because I've also been approached by a few.
So these are the sectors into which we operate. We were able to raise a lot more money during this last tax year, but you saw how busy the sales team was.
I know.
Talk about that.
No more weekends. That's all I can say to help you grasp the whole I would say business of what you do. But it's quite exciting.
Of course, it
was quite exciting. What I did find is that even during that period of us being that busy, is that the more we talk about it, even us as a sales team, the more we talk about this to clients who have no idea what this is. Yes. Some of are even skeptical to say, there's no way what you're saying is true. But the more we engage on it, the more we know it better, the more it actually unpacks to you as well as the sales team.
So what's your sales target for June 2021? Cut off with the sunset clause.
500 mil.
Hey, wonderful. Please get your team going. Hey?
We are already.
All right. So this is what we're going to talk about right now. The standard 12J offering is what you see on the screen now. Various people can invest, various companies and partnerships and trusts, and they get 100% tax deduction.
For that financial tax year.
For the same year in which they invest.
I need to emphasize that, Dave, because I have had the clients, not even one, in fact, a few, who actually are, maybe because they didn't understand it quite well, thinking, so if I invest via Section 12J, I will always be getting 100% tax cut off. I'm like, no. It's only for that year. So if you invest now, it will be for 2022. So 2022, you need to invest before the 30th of June.
Excellent.
Give us, Dave, I'm not sure if now I'm taking over.
No, you do what we have to.
Can I run with it? Thank you. So you give us, if at the standard 12J procedure, you give a minimum of 1 million, and we are able to reduce that from your taxable income for that year. As an individual, minimum is 1 million, and the maximum is 2.5 million. That also goes for trusts as well as partnerships. What are partnerships that we're talking about here? It's me and Dave partnering up together because our taxable income individually does not amount to 1 million. So we can take up to 3 partners, right? And then companies can give us a maximum of 5 million. Yes. The minimum is always 1 million.
Yes.
But companies can go up to 5 million. So, but this is money that is needed up front. So on your standard 12J.
Yes, that's correct, Zetu. So we've looked at that, and if you look at that slide we had from 2018 to 2019, we had one project with very few investors.
Because you needed that minimum of 1 million up there.
Yes. So this is a standard, as you were talking about now, Section 12J offering by most of the other 12J companies. And you know there's over 100 12J VCCs registered with SARS.
Over 100.
In South Africa. And we're all clamoring now till the 30th of June to get new investors. So this is the standard opportunity that 12J offers clients. Why don't you speak into ours a little bit from a
Now, this is how we've worked the magic. How we work the magic genuinely is to say now that required minimum million, we've actually flipped it on its head and said we as IEV now raise you, potential investor, a loan of that million.
Just to clarify that quickly, as you see on the slide there, Impact Empowerment Ventures doesn't lend any money.
In itself, yes. Thank you very much. It's an Impact Cash Management Fund, and then you invest as the taxpayer in IEV.
Yeah.
Whereby you get then a share certificate that you can produce when you do your tax filing to SARS to say, hey guys, I've actually invested this much through IEV, and then you can reduce now your taxable income by that much. And your rebate, because that's what's due to you as an investor now, your rebate then goes into that loan investment. So in the example we've made here, I think the person is earning tax is 40%.
Yes, that's correct.
So that 400K you'll be getting back. Let's imagine you were earning $1 million in that year. That 400K will go to paying your loan account with Impact Cash Management.
And what's the cost of setting up that investment to an investor?
25,000. That is the securing deposit for.
What's a securing deposit?
It's actually you that's the money we need from you as an investor.
Upfront.
Yes. Instead of that million, we need that 25K.
And what's that for? And why is it called a securing deposit? Why not a fee?
Mainly
commission or something.
No, it's not. Mainly, it's SARS needs to know that you have actually paid as an investor as well. You've put something at risk.
Yes.
So to make this whole engagement as well.
All right. So is that 25,000 lost to the investor?
Not at all. So that 25,000 is actually paid back to the investor in 5 years. Actually, after 5 years, because it needs to be 5 years in the investment through IEV.
Yes. So what you're saying is it's a securing deposit that will be refunded.
That will be refunded.
What happens if this qualifying company down the bottom there goes insolvent during the 5-year period that the investor's there?
That 25,000 is the only risk that the investor can face.
Okay.
Yeah. So this is a full liability loan, limited collateral loan. That's what I wanted to say. But is the limited collateral is only the 25K that we request from the investor, the share certificate, right? As is those are the two that I can remember.
And also the refund.
And also the refund, the refund from SARS things there.
And then the dividend stream that
the
comes.
Dividend stream that comes through to pay the loan. So I think we need to actually show our attendees exactly how the loan is then serviced, because I know that is the question mostly to say, hey, what are you talking about now? I'm going to get into a loan. So that screen that details exactly how our gearing structure works, where your 400,000 in the event that you pay 40% tax acts as cash as per the I would say the bar on the right, where it says 400,000 cash and the 600 is then debt. That is the loan to the investor that acts as an asset in these qualifying companies. And how that 600K is then serviced, it is through dividends that are paid to the investor, but they first service the loan in the 5-year term. Anything more, perhaps, Dave, that I may be missing?
Yes, what I'd like to highlight from my side is this qualifying investment. The qualifying company, if I may just go back to this slide. The qualifying company services the loan. So the loan to the investor is a zero interest loan.
Yes.
Impact Cash Management Fund Pty Limited makes this loan. As you said, it's a full recourse loan.
Full recourse loan, but limited collateral.
And limited focused collateral. The share certificate, the dividend stream, the
security deposit,
and then the 12,
rebate,
the refund. Those are the sessions that the lender contracts with the borrower.
So in the event that everything goes belly up, we can't even come after your shoes.
No. What does happen if the qualifying company goes insolvent? What happens?
Not certain that maybe you can help me out.
Okay, so if the qualifying company doesn't produce, then the 25,000 gets forfeited by the investor. But if there's collateral, what must happen now? The share certificate needs to be delivered to the lender.
Okay.
Because it's been seeded. And therefore the investor will get nothing at the end of the 5th year. Because the underlying share class, that qualifying company went insolvent. And these are closed share classes we're talking about here.
But the most important thing, Dave, I'm sorry to cut you there, is to emphasize that we will not go after anything of yours as an investor who partakes in this investment opportunity to say you've put anything else at risk.
Correct.
Yes.
And what are the returns that investors can expect, Setu?
The benchmark is 1.5 to 2.5. So with Tatoma, as we are talking, if I may just let the people in, it's a little bit higher. It's a little bit higher. So the returns, of course, are industry-based, depending on what you're investing in. But you are looking to actually, in this example we've made there, to actually enjoy the upside of that 600K. That's what you are actually looking to actually get or realize as an investor, whereby you wouldn't have had that opportunity if you didn't have that first million to actually put down.
Yes. So there you see the downside risk is the 25,000.
As you've said, yeah.
And the goal, depending on the sector in which the qualifying company operates, we've got to understand, Zetu, that farming might operate at a smaller margin and therefore a smaller internal rate of return per annum. Whereas the cannabis project, so it depends on the farming, but cannabis is high value, lower volume type with a big margin. So the expected returns per annum
the same as the
are higher. Yeah. And then student accommodation is also quite a low margin, but the value is under the asset because it's a very valuable property.
Why?
And when you exit it at the end, the net asset value of the shares are paid out to the client.
So this is more than anything, I can't emphasize it enough, Dave. Without our mechanism, most people will be left outside the door.
In other words, they don't have the million rand.
They don't have the million rand, then they can't actually even be listening to such proposals.
True. Thank you, Zetu. These are the sectors in which we are happy to facilitate a company raising its own capital. We don't need a credit check.
Not at all, no.
So it could be a startup. Obviously, we do our due diligence.
Yes.
Financial merit, we got to do a nice business plan. The business concept has to make sense. The people that we funding needs to be the right people. We help empower that business by mentoring. We've got an entrepreneurial development team that does that if they need it. They don't need collateral for the loan or the investment because it's equity in the company. And then if it's a startup, they don't have a track record.
Yeah.
Now, these are the things that banks and many other financial institutions insist upon. And this is why I love Section 12J.
Very much.
I've got a saying, Zetu.
Yes.
This is patient capital.
Yeah.
Because generally it flows when the tax season opens now in July.
Yeah.
So these qualifying companies don't get it tomorrow.
No.
The investments made before the 30th of June, the soonest they'll get the first tranche into the when the tax season opens. But it's also what I call redemptive capital. So they are able to use that loan as an asset on their balance sheet to get other loans from DFIs and other soft loans from funding institutions.
But they're now in business. They can now start knocking on doors to say, hey, we've been able to raise this much capital. We are in need of even further
co-funding.
Yeah. That's beautiful. That's the beautiful thing to do.
Yeah. So it's a catalyst.
Now the call for action to you as an investor is to get involved now. This is what you need to do. Consider attending our next 12J session webinar. Our next one will be with one of our qualifying companies presenting themselves exactly what they do. But this information is still available. You don't have to wait for it.
Yeah. On our website.
On our website, it's still available even through us. So, and then, of course, get to sign the commitment to invest before the 25th of June 2021.
Yeah.
Because the 30th is the last day to actually get this done. Complete the required documentation. To start off, it's quite I think it's about 4 pages.
So that first commitment to invest document.
Yeah, the first commitment to invest, and then we start off, and then of course the whole I would say application then works its way out until before next year, and then we file it with SARS, and then You can then give your IRP5 when you do your tax filing together with the share certificate, then wait for the rebate for the patient capital that Dave was talking about to put into a qualifying company of your choice as an investor.
Yes. So that 25th of June is an important cutoff.
Too much, Dave, because we actually chose that mainly because of what we saw this year when we said the 28th of Feb. We were working on Sunday.
And there's a lot of paperwork. So our Impact Empowerment Ventures team, together with the Cash Management Fund team, will be assisting you as an investor to go through these forms. And we're always just a phone call away.
Very much. Thanks, Dave.
And then just to remind you, who can invest in this?
So it's individuals, it's partnerships. No, partnerships is not the business in a partnership. I say this because some gentleman asked me, said, oh, so my friend and I are in the business of a partnership. I was like, no. This partnerships partnering with another taxpayer. So it's individuals, partnerships. Remember, the maximum partnerships is 3. So we can have 2 up to 3.
Yes.
It's trusts and companies.
Yes.
We say provisional taxpayers are written there specifically to say with them it's even easier that when they then pay taxes, they don't even need to take it to SARS. They can just bring it to
all provisional taxpayers.
All provisional taxpayers.
So the amazing thing is, as one of the final testimonies,
yes,
one of our new share classes called diversified agriculture. A number of those investors from
provisional taxpayers.
They're provisional taxpayers.
Look at that.
So some funds have already flown in to those qualifying companies, and those investors only brought their project in February
this year,
and those investors invested their taxes into this project already. Last week, the first fund started to flow, and that's an exciting agricultural project.
Very much.
So the rest of the capital, that patient capital, will only come next year with IRP5 type taxpayers. All right.
This is for your pay as you earn, guys.
Yes.
Okay.
So just to remind everybody, we're part of a group. That's the website that we'd love you to visit. Is the commitment to invest on the website?
It is on the website as well.
So that's the first document.
That's the very first document we have started.
Yes.
Yes, and then the rest, of course, I would say phase compliance documents. They're quite a little bit, but
FICA,
all of that. Those follow after. The very important one is the commitment to invest,
and then the other important one is the loan agreement and the subscription agreement
and the record of advice. Why? Mainly because, as I had said, Dave, earlier, when we unpack this to clients, we ourselves get to see it even better. To say now, this is just one document, of course. I would say fragmented. But
all these documents need to be seen together.
To be seen as one thing because they speak to each other.
Yeah.
The record of advice, what I like most about it is that it even stipulates exactly what is the collateral on this loan.
Yes.
So it helps put clients at ease to say, okay, now I understand. Of course, upon understanding this thing now, the question I had is now answered to say, haven't I actually put myself in a very, very tricky situation by taking this out?
Are you asking me the question?
No. I'm just saying with clients. No, to you. No.
Well, the tricky situation I would answer is that if you don't consider 12J, you're missing out on an asset that you will not have in years to come. Whereas if you do invest in a 12J now by the 30th of June, you have an asset that's growing for you and you're empowering small businesses to employ new people and to stay in business.
Yes, true.